Great news, World War III has been postponed for the time being, but the market still ended up pulling back for the session. As if the news cycle and financial catastrophe surrounding cryptocurrency couldn't get any worse, we got some headlines this morning that said that Genesis's crypto lending unit is halting customer withdrawals in the wake of the FTX collapse. This is exactly what we did not need right now for risk assets. The unit known as Genesis Global Capital serves an institutional client base and had 2.8 billion in total active loans as of the end of the third quarter of 2022. Now, this is a lot different than just some retail crypto punting exchange where everyone goes 20 times levered and rolls the dice. This is actually a legitimate player in the industry that serves institutional clients like mutual funds and hedge funds. So this was a big deal, and it really just set the tone for a risk-off session. The indices suffered a pretty minor pullback, all things considered, with the S&P 500 finishing down 0.76%, our NASDAQ QQQ down 1.36%, and the ARK Innovation ETF really catching the brunt of the sell-off. It finished down 5.15%. Oddly enough, the volatility across all of these indices ended up decreasing on the session, and I'll take the win there because we did have news of a potential World War III situation breaking out yesterday, and now we got more crypto fallout today. Our TLT long bond ETF did finish up 2.19%, and it appears that there is a regime change in the works. Remember, for most of the year, this TLT long bond ETF, it's been in a horrible, devastating downtrend as long-term interest rates have risen from about 2% all the way up above 4%. But now, given the lighter than expected CPI as well as PPI prints, we're seeing this change of character. It's now above the 20-day simple moving average, and we've moved our way through this monthly value area, and we actually broke out above this 101.16 level. I do believe, as Jerome Powell states all the time, monetary policy works with long and variable lags. So the interest rate hikes that the Fed is doing today are going to impact the market and the economy in 2023. In my view, as of this juncture, the market's transitioning from a regime of inflation forever to a regime where investors are bidding up bonds because they realize the economy is not nearly as good as everyone thought, and growth is really going to come in. And we're already seeing signs of it. This morning, we got the Target earnings report, and check this out. Target's comparable sales are at risk of falling in the fourth quarter, and this would be the first time since 2017. Our relative strength leaders for today were the XLU Utilities ETF, which finished up 0.9%, our Consumer Staples ETF, which finished up 0.49%, and oddly enough, our MSOS Cannabis ETF. We are noticing at the top of our momentum list that we have new sector leadership. And as trend traders, we want to make sure that we're on top of this. Our number one leader at the moment is the KWEB China Technology ETF. So I want to make sure that I have at least some exposure to that group moving forward. And for that reason, we did add a position in the SC common shares for $58.88. Let's take a look at the chart. This company reported better than expected earnings yesterday, and as I look through the earnings transcript, the management team shifted their focus from blistering sales growth to profitability. And that resulted in this stock moving up about 36% in a single session. Now, I don't like buying these stocks at overextended highs, like for example, buying yesterday at $66 a share. But off the pullback to this top of the monthly value area, I bought the stock with a very tight stop loss at $57. The S&P 500 consolidated for a fourth straight session, and now the 5-day EMA has finally caught up to price. Pullbacks to the shorter-term moving averages are completely normal, even if you're in a bullish trend. The fact that we're getting so much bad news day in and day out, and the S&P 500 can only consolidate in time, and it can't even really manage to pull back, this is a pretty bullish development into the end of the year. Our NASDAQ was a bit more volatile today, but again, this one also only pulled back to the 5-day EMA. We did notice some selling in the semiconductors group ahead of NVIDIA earnings, and it turns out there was not a whole lot to be worried about. Nvidia reported their numbers, and in the after-hours session is actually trading a few percent higher. The Russell 2000 finished out the session just below the 5-day EMA, and the Dow Jones was the haven index of choice. It barely finished down on the session, and it has really just been moving sideways after a very nice run. Our ARK Innovation ETF, which is actually pretty highly correlated to the cryptocurrency industry, finished down 5.15%. We closed below this monthly value area high, and we tagged this 10-day EMA. Tesla continues to weigh on the ARK Innovation ETF, and we actually took advantage of this weakness by purchasing some Tesla call options. As we did our nightly routine of scanning the market, we did find a few attractive candidates for tomorrow's session. Quanta Services, ticker symbol PWR. This was actually brought up by one of the members of our Pristine Capital trading community. We're trading right around these swing highs, and this name did show some very nice relative strength in a relatively weak tape today. If you want to interact with us live throughout the trading session, visit pristinecapital.net and get yourself signed up. Arista Networks, ticker symbol ANET. We actually sold our call options in this name yesterday, and now today we got to pull back to the 10-day EMA. While we do have a flurry of red candles here, it does appear that the volatility in this name is beginning to contract, and oftentimes when you get that VCP pattern, you can have an explosive move to new highs. I am considering reestablishing this position if we get another pullback to the 10-day EMA tomorrow, and I'm probably going to target this Venom R1 pivot at $139.38. WWE, it doesn't get much cleaner than this. This stock finished out above the 20-day simple moving average, and we also got a beautiful close above this monthly value area high. Dexcom Inc., ticker symbol DXCM. This company had a nice power earnings gap set up a few weeks ago, and it has been drifting sideways, allowing the 20-day simple moving average to catch up to price. I did notice in my nightly scanning that a lot of these inflation forever stocks are beginning to break down. If I'm feeling like a madman tomorrow and want to take the short side, LTHM is a prime example of that. If I do decide to short this name, I'll likely be looking for a target at this 200-day simple moving average. One of the most difficult things to do as a price action trader is sit completely still and take no action. We might have to do that tomorrow unless we can snipe an entry in one of our focus list names. If you enjoyed this video, make sure to smash the like button, subscribe to the channel, and leave a comment below. We just hit 500 subscribers and we are on the road to 1,000.